Welcome to it. Time to have a look at what happened on the Asian side of things. We did see those specific markets mostly down. This comes as a result of what happened on the Taiwan side of things. That market tumbled, and this follows authorities saying that they may have to increase the COVID-19 alert level as more cases continue to come through, especially over the past days. That market down 4.1%, and that negativity filtered through to the Nikkei. We saw that particular bourse down 1.6%. The Hang Seng index on that particular front up 0.6%. But when you look at the Chinese mainland market, bit of a mixed picture there. The Shanghai composite up 0.6%, and the Shenzhen component up 0.7%. When we move things to the European side, markets slightly higher as investors continue to take in a lot of data coming through. Everybody looking forward to that U.S. inflation number that we've been talking about. The market at that particular point, the FTSE 100 up 0.8%, followed by the German DAX in positive territory up 0.3%, and the French CAC also up nearly 0.25%, and the futures at this particular point declining, of course, as investors rather continue to let go of tech shares. But to give us a full picture, we are joined by Chantal Marx, who is the head of research at F&B Wealth and Investment. Chantal, thank you so much for your time.
Oh, no, it's only a pleasure. It's great to be here again, Tash.
So let's talk about, JSE performance so far. What do you make of it?
Well, it's actually been quite surprising. So, I mean, we knew that Tencent recovered quite nicely in line with global tech shares this morning. So we were expecting Prosus and Naspers to be quite strong on the day. And of course, they make up a big chunk of the index. But there has been a lot of negative sentiment floating around this US CPI number. So we weren't expecting a very strong day on the market, but so far so good. We had a very strong start initially with Naspers and Prosus announcing a corporate restructure and cross-holding story that will make your eyes water, but was nevertheless quite positive for the share price. And as I look across the screen, it's only the financial sector that's still under a little bit of pressure for now.
So we're going to have the, a discussion with the CEO of Transaction Capital. But let's talk about that Naspers Prosus share exchange. I mean, someone described it on social media as slightly complicated, like one snake eating another. I mean, what do you make of it, and how should it, probably unfold?
Yeah, I mean, so it has been quite interesting to watch, and what is effectively happening. Sorry, I'm getting a lot of feedback in my ear at the moment. From what I can understand, we are basically looking at Prosus and Naspers trying to both get to a space where the discount that they trade at relative to their underlying holdings narrows somewhat. So for Prosus, the idea is that they want to increase their free float. That means the shares that are not held by Naspers and are tradable on the European bourses specifically, and in that way attract additional passive flows or index funds that will buy that stock and hopefully narrow that discount. And for Naspers, they're actually looking to lower their free float so that they don't make up such a big part of the South African market that no active manager can actually buy the stock, because it would be very, very risky to, for example, go overweight Naspers. So they can buy it, but they won't own it in excess of the index level. So in trying to do that, they've decided to have Prosus buy a big stake of Naspers by effectively giving Naspers shareholders a stake in Prosus. So it's all quite complicated, but it does make sense. I think the only question marks around that is whether or not it will actually be effective. For one, I think that this complicated cross-hold strategy might not be something that the investors, or the European investors at least, like very much, the South African investors as well. And I don't know if it's going to have the requisite impact on Naspers' active holdings to begin with. So it sounds very complicated, but there's a lot to think about here. And I think for Naspers shareholders specifically, a lot to think about in terms of possible tax implications, because I think that that's going to be the biggest issue here for shareholders.
Well, Chantal, thank you so much for your time this afternoon. That is Chantal Marx, who is the head of research at F&B Wealth and Investment. We were going to talk about that U.S. inflation number that we are expecting a little bit later on, and then whether what we're seeing when it comes to U.S. markets and the bond performance, whether investors are justified to feel a little bit fearful when it comes to that misreading of the inflation pattern from the Fed. Is it transitory? Is it not? We don't know. We're going to get a better sense of that picture a little bit later on. But we did mention that Transaction Capital did publish their interim numbers. They've resumed their dividend, and of course the business does look as though it's performing well. But to give us a full picture, we are joined by David Hurwitz, who is the CEO of Transaction Capital. David, thank you so much for your time.
Hi, thanks. Nice to be on the show.
David?
Hello? Hi, can you hear me? Let me just move this phone away.
Not sure if David can hear me, but my first question, I suppose, perhaps take us through the 6 months that was for Transaction Capital. How would you characterize that?
Yes, I can hear you. Thanks for having me on the show. I would characterize the 6 months as being a really good mix between organic growth on the one hand from our two businesses, SA Taxi and We Buy Car and TCRS, and then acquisitive growth coming from We Buy Cars. We're very, very pleased with that. If you take a look at our operational stats, whether it's loans originated or collection levels or insurance policies originated, all of our operational stats are either nearing pre-COVID levels or exceeding pre-COVID levels. So that is a really good result. If we take a look certainly at our operational capability, to the extent that the country goes into a third or a fourth wave, we don't need to change anything in our operations. Yes, economic activity would move in the whole of South Africa, but we don't need to make any operational adjustments to our business. And this allowed us to grow both of our businesses above 2019 levels. So both SA Taxi and We Buy Cars have grown earnings above 2019. It's pretty easy to beat 2020 levels at the moment, but we're talking about exceeding 2019 levels, and that was all organic growth. And then when you bring in the investment income coming out of We Buy Cars, that allowed our business to grow earnings, and I'm comparing above 2019 levels, earnings to be up 29% and earnings per share to be up by 18%. So really fantastic results. And finally, that allowed us to resume dividend payments again with no change to our dividend policy.
Let's talk about the decision to increase the stake in We Buy Cars. I mean, that's quite fascinating. What patterns and trends are you seeing there when it comes to the used car market?
Well, I think what we're seeing is very similar elsewhere in the world. It's an international phenomenon at the moment that used vehicle sales are increasing significantly. You'll see a few things. The first thing is that due to income constraints, consumers are opting to rather buy a second-hand vehicle as opposed to a new vehicle. Secondly, prices of new vehicles continue to increase, and I guess with COVID, this is escalated because OEMs aren't working at optimal capacity. And then also, again, driven by COVID, supply of new vehicles is down. So second-hand vehicle volumes have increased significantly. And if you look over the last 5 years, new vehicle sales have gone down by about 3 or 4%, and second-hand vehicle sales have increased by 1%. So pre-COVID, that was the trend. This trend has now been exacerbated by COVID, with new vehicle sales dropping even more and used vehicles sales increasing. The other thing that we've seen is that a big drive of e-commerce. So used used vehicles or vehicles are really the next large asset class to starting being traded on e-commerce. And for all of these reasons, we've seen a very nice structural market behind the used vehicle space in South Africa and internationally, and specifically if you have a digitization of your business. So we're very excited about that from a sector and structural perspective.
I'm curious to know, David, your sense of the South African economic environment at this particular case. How does it all feed into the different structures of the business, especially when you look at, consumer spending patterns when it comes to the availability of transport, etc., in the taxi industry?
Yeah, so we have very unique data sets. What we do is we track all of our vehicles, and we use this vehicle mobility data to understand what's happening in the minibus taxi industry. And of course, that is a proxy for economic activity, because what we do know in South Africa is that about 70 to 80% of our population uses public transport, and minibus taxi is the largest component of public transport by far. In actual fact, it makes up 84% of all public transport trips, with bus and train making up a very small percentage. So to the extent that we see activity in the minibus taxi sector, that is a precursor to economic activity, because people need to move around. Commuter mobility precedes any economic activity. So we've tracked that carefully through COVID. What we've seen, first of all, is that the minibus taxi industry is indispensable. Even in lockdown level 5, about 60 to 70% of our minibus taxi clients operated. The second thing we see is a very quick recovery. So as restrictions are eased, we start seeing much more activity in the minibus taxi industry. It normalized by December. That had normalized in terms of distance traveled and number of operators operating, but loads were still down. So, still less, whilst travel time and kilometers traveled was back to normality, the number of commuters per trip was down. Then as we went into adjusted level 3 in January or late December, that dipped slightly back again to about 70 to 80% of kilometers traveled, but then recovered very quickly in February and even better in March. So we have some really good data sets which allow us to see what's happening in the economy in terms of people moving around.
Well, David, thank you so much for your time. Looking forward to catching up with you again, especially when that deal does conclude, the intention to increase your stake with WeBuyCars. Thank you so much for your time. That is David Hurwitz, who is the CEO of Transaction Capital. That is it from me. We're going to take a quick break, and when we come back, we'll have more news after that.